Assalamualaikum. Today I will explain about the other important indicator which is moving average convergent divergent or MACD. MACD was developed in 1979 and since that it became popular and most useful indicators used by the chartists and traders in identifying the momentums and the direction of stock price. What is MACD? MACD is one of the most popular and well-known indicators in technical analysis. It is used to signal both the trend and momentum behind the securities. This indicator comprises of two exponential moving average or EMA covering two different time periods which help to measure the momentums in the security. The idea behind these momentum indicators is to measure the short-term momentum compared to the long-term momentum to help determine the future direction of asset. The MACD is simply the difference between these two moving average, which in practice, MACD being calculated based on 12 days and 26-day EMA. So MACD is a trend following momentum indicator that show the relationship between the two moving average of price. MACD can be categorized under a lagging indicator. How to calculate MACD? So MACD comprises of three different components. First, MACD line. Second, signal line. Third, MACD histogram. So the first one is MACD line. How MACD line being calculated? MACD line is the difference between 12-day EMAs and 26-day EMA. From this MACD line, if this MACD line show a positive figure, it indicates that the 12-day EMA is trading above the 26-day EMA. And when it show a negative MACD, it indicates that 12-day EMA is trading below the 26-day EMA. The second component, which is a signal line, is calculated based on 9 days EMA of those MACD line. After we get the MACD line, then we can calculate 9 days EMA based on that MACD line to creating the signal line. These two lines is important in signaling the bullish and bearish. The third component is MACD histogram. So how MACD histogram been developed? MACD histogram been developed by taking the difference between MACD line and a signal line. A positive histogram when the MACD line is above the signal line and a negative histogram when the MACD line is below the signal line. How are we going to use MACD in helping us to making a decisions? Okay, this is the crossover rules. MACD have very unique crossover rule as compared to the other indicator. For each buy and sell signal, we can refer to three different crossover rule. Okay, the first one we will discuss about the buy signal. So for the buying signal, we have three choices. The first one, the buying signal appear when the MACD crosses above the signal line. Okay. Second, when the MACD is above the oscillator or a zero line. Third, when MACD histogram turns up below zero. How it look like, I will show you later. Okay, for a selling signal, first one is when the MACD crosses below the signal line. Second, when the MACD is below the oscillator or zero line. Third, when MACD histogram turns down above zero. Okay, this how MACD look like. Okay, MACD known as an oscillators indicator. That's why its position is at the bottom of a stock price. Okay, as compared to EMA and simple moving average, it's located on the stock price or stock chart itself. So as I mentioned just now, referring to the crossover rules, we have 3 crossover rules. So let's look one by one. Okay. So before that, we need to identify which one is the MACD line, which one is the signal line, and which one the histogram. Okay. In this case, we can refer the black line is referring to the MACD line, where the red line is a signal line and this one is the MACD histogram. Okay, so referring to the first crossover rule is when the MACD crosses above or crosses below the signal line. Okay, so the first one, we look for a buying signal. Buying signal appear when the MACD crosses above the signal line. For example, at this point, okay, at this point, MACD crosses above the signal line, it indicates a buy signal. Okay, the second one, when MACD crosses below the signal line, it indicates a sell signal. Okay, so we can focus into this one. We can see that MACD line crosses from above to below the signal line, indicating a sell signal. Okay, the second crossover rule is by looking into the MACD line and the zero line. Okay, so in this chart, we can see that the black line is the MACD line and we have a zero line, or also known as the oscillator line. MACD is a non-bounded oscillator, so that's why they don't have any maximum or minimum numbers. So what they have, only a zero line. Okay, so when we want to use the second crossover rule by looking into the MACD line and the zero line, so how you want to indicate the buy signal? The buy signal appear when the MACD line crosses above the zero lines, so it indicate a buy signal. And then for a selling signal, it appear whenever the MACD line crosses below the zero line. Okay, so this second crossover can be used as a confirmation of bullish or a bearish trend. I will show you later in the next chart. The third crossover rule for MACD is by looking into the histogram. So this is the histogram. So histogram basically show the momentum of the price movement. Okay, whenever you see the histogram closest to zero line, it shows that the momentum has decreased and started to change its direction. Okay, first we want to see for a buying signal. So buy signal appear when you see the histogram from below zero and then crosses, turns up to the positive area. So this indicate a buying signal. And then the other way around, when you see the histogram from a positive positions and then turn down into below a zero line, so it indicate a selling signal. Okay, for MACD, we can also check for the divergent and convergent. So first, we see about the bullish convergence. Bullish convergence happen when price show a downtrend and MACD showing a uptrend. Okay, what are the meaning by this? Okay, so when price show a downtrend but MACD line creating a higher low, this indicate the momentum was low and there is a possibility of change of the direction in the price from downtrend to uptrend. That's why we call it as a bullish convergence. Okay, we can see here the price showing downtrend. However, when we check into the MACD line, okay, the MACD line creating a higher low. So, and then when we draw two lines, we can see that these lines are converged. So, this is indicating the possibility of downtrend will end soon and then the price will change from downtrend to an uptrend. Okay, how you want to see the confirmation? Confirmation when the MACD crosses the zero line. Okay, so it signals that a bullish area or bullish situation is just started. Okay, whereas for the bearish divergence happen in uptrend. Okay, if the bullish convergence happen in the downtrend, bearish divergence happen in uptrend. So we can see here, okay, so this is uptrend and during this bearish divergence, price showing an uptrend but MACD line making a lower high, then price fail to make higher high. These stocks change a direction from uptrend to downtrend. For example, when you see this trend and you see that price fail to make higher high, so we can also check either MACD creating a higher high or a lower high. In this case, okay, we can see that this slope is slanted down. So this MACD creating a lower high. So this is one of the signal of bearish divergence. So what are the meaning by bearish divergence? There is a possibility of uptrend will reverse to a downtrend. So how you want to get the confirmation? First, we can see into the breakout of the downtrend. Okay, breakout uptrend to downtrend. And then we can see the confirmation by checking the MACD line crosses the zero line. Okay. So this is the advantage of MACD. It incorporates aspect of both momentum and trend in one indicator. So it will not be wrong for very long. Second, has the ability to foreshadow move in the underlying security. Okay, we can see that MACD mirroring the price movement. Okay, then it can be used as key factors in predicting a trend change. Okay, third, MACD can be applied to different time frames such as daily, weekly, or monthly. For disadvantages, we know that MACD is a lagging indicator, so there is a lag between the two different EMA. Okay, MACD is not particularly good in identifying overbought and oversold because they don't have the overbought and oversold level. And third, MACD calculate the absolute difference, not the percentage difference. Okay, I will show you how we want to use the MACD in chart nexus in the next part of this video. Thank you very much. Assalamualaikum.